Hello, this is Matt on the Moon Lambo channel. Over the last day or so, crypto markets in terms of price action mostly moving sideways, but there's no shortage of fear out there or expectations from analysts that we could be seeing some price action to the downside. Now, one analysis particularly caught my attention and I found very interesting, so I want to share it with you. This will be the first thing I cover in this video, actually. It comes from this piece from the Daily Hodl titled, Pantera Capital says crypto assets are very cheap right now, warns this annual event could depress prices. And so Pantera Capital is the first hedge fund in the United States to offer a cryptocurrency. So they've been around for a long time, and it was founded by Dan Morehead, who I've always been a fan of. He also happens to be very pro XRP, and he's long XRP. In fact, he thinks that if you fast forward a decade, XRP may be one of potentially only a dozen or so cryptocurrencies that has any sort of actual importance. Other than that, most cryptos will have gone the way of the dodo, my favorite extinct avian creature. But he talks about a reason that you may see, if history is to repeat itself, in the very short term, a Bitcoin price tank, and due to taxes specifically. And I'll explain why, but taxes in the United States. And you might think, well, how the hell is that the case? Taxes just within one country in the United States. The whole world's not America, Moon Lamb. But yes, I know. I'm aware of that. But nonetheless, even though I agree with you on that point, it is the case that from time to time, what happens in the United States globally impacts the price of crypto. You want proof of that? Look no further than what happened when the SEC came after Ripple. Global prices of XRP tanked, even though somewhere in the neighborhood of 95% of XRP trading occurs outside the United States. So I want to share with you that, and also, despite the fact that we might be seeing Bitcoin go down lower, there is an analyst that I follow that says that we could be seeing new Bitcoin all-time highs in just 2 or 3 months potentially, despite that. And if that happens, again, XRP follows Bitcoin. And there is an expectation from another analyst I'll be highlighting in this video also that XRP may be cracking the $1 mark again. XRP might crack $1 sooner than later. Of course, it's dependent upon Bitcoin. And then there was also this. I got a few things to say about this. This is a piece from the Daily Hodl titled, Global Watchdog Group issues warning on crypto assets, says they pose risk to world financial stability. And I read this article and I was just audibly sighing the whole time, a couple of face palms, so I just got a couple of things to say on that. But I do want to be clear at the outset, I do not have a financial background of any kind. I'm not offering financial advice, and you definitely should not buy or sell anything because of anything I say or write. I'm just an enthusiast who enjoys making YouTube videos about crypto topics, but just as a hobby and just for fun. As I record this, XRP's at 80 cents, Bitcoin at 40,395, market cap for the asset class 1.87 trillion, and Bitcoin dominance at 40.94%. So again, about where it's been as of late. And here's the Crypto Fear and Greed Index. See, it doesn't take much for the poor little lemmings out there to get very fearful. Those poor, lovable, cuddly little lemmings out there. Heart goes out to them. Crypto Fear and Greed Index at 25 out of 100. Don't make no damn sense. There's so much opportunity here, but they feel what they feel. Now take a look at this. This is the piece from the Daily Hodl about Pantera Capital. Digital asset investment firm Pantera Capital says that cryptocurrencies are currently trading at discount prices. The firm says that, despite dropping to around $40,000 from an all-time high of nearly $70,000 in November, Bitcoin was not overvalued. And folks, I appreciate analysis that comes from Pantera Capital because it comes top down from Dan Morehead, who is the founder and CEO of Pantera Capital. And I just find him to be honestly incredibly insightful. And take a look at this quote. We've updated some Bitcoin charts first, shown in our June 2021 letter. They confirm our sense that the markets did not get overvalued and are, in fact, very cheap right now. The year-on-year return never went literally off the chart like in past peaks. It's down 11% year-on-year during a period when the Fed printed $5 trillion in that period. Seems cheap. Bitcoin's 4 year-on-year return is at the lowest end of its historical range. Again, doesn't look overvalued, and that's the end of the quote. Now, Pantera says that prices could go even lower because of the tax season. The firm explains that crypto traders may sell holdings to pay for their taxes on April 18th this year. And take a look at this. This is fascinating, but human behavior, folks. Here's the quote. Some of crypto selling pressure has been unintended tax positions. There were $1.4 trillion of cryptocurrency capital gains created last year. That could have caused a decent chunk of the recent sales. A tax day can be important to crypto prices. After the 3 previous big run-ups in 2013, 2017, 2020, and this one, 2021, Bitcoin peaked 35 days before tax day and then declined to a local trough as investors sold off assets to cover taxes accrued in 2020. That makes some sense. End quote. And so I remember Dan Moorhead specifically talking about this just a year ago, and it did happen. So perhaps there's something to this. I'll be curious to see if this happens again. Now, Pantera says that the selling pressure may be attributed to the large number of traders who are unaware that crypto transactions are taxable. And I don't blame people. The tax implications of crypto, not well known, especially if you're one of the younger investors out there. You may not be used to the tax implications of pretty much everything in life. But it is what it is. And in the United States, come tax day, there are implications. Now, last year, tax day was in May. I can't remember exactly what day. It got pushed back, I think, basically thanks to all the pandemic stuff. But historically, it's been more like the middle of April in the United States. But take a look at this quote. A lot of crypto traders are new to investing. You can imagine a person buying as much Bitcoin as they can, and then their tax preparer tells them they owe 34% of the gains in taxes. Since they're all in on crypto, the only way to raise cash to pay their tax bill is to sell some crypto. Prices fall leading up to tax day. End quote. So I'll be watching that to see if that happens again this year, but hey, he was spot on last year. Wouldn't be surprised to see it. So anyway, all that to say, if we do see some price action downward, just keep this in the back of your mind. This may be another one of those real world things. I do think most of the price action that occurs within crypto has nothing to do with stuff like this, our fundamentals surrounding cryptocurrencies, but from time to time there are outside factors. I just think with the nascency of this asset class, that's not usually what's going on. Now take a look at this. So here is a tweet from chart analyst Leb Crypto from February 14th. And I've shared this before, but I want to share this to give the latest update on what he had to say. But he wrote about XRP at that time, 5 days ago. As long as 75 cents holds, nothing is bearish about this. I'll make the chart full screen in a second. He says, nothing is bearish about this, referencing the chart. Healthy bullish consolidation within a bullish pennant on the daily suggests continuation into at least the $1 target. Higher targets short term are also in orange. And here's the chart in case you want to see what he's talking about. As far as the higher targets, he's looking at 99 cents, $1.07, and $1.14. And this would be potentially all within the relatively shorter time frame. And then just yesterday, he had an update on this, and he wrote, because we did see some downward price action, so here's his update on XRP. Bounced exactly off 75 cents yesterday as Bitcoin retested crucial $40,000 support. Still looking good for continuation higher, in my opinion, unless Bitcoin isn't done. Yes, which is why I frequently joke that if Bitcoin sneezes, redo all of your analysis for any other crypto, because the market moves in tandem. And for the bigger moves for Bitcoin in particular, if they're to the downside, yup, don't be surprised to see the whole market tank. Very commonplace. Now take a look at this from the Daily Huddle. Here's the worst case scenario for Bitcoin and crypto markets according to analyst Nicholas Merton. One popular crypto analyst has an optimistic view of the future price action of Bitcoin despite the leading crypto's most recent market dip. In a new YouTube update, DataDash host Nicholas Merton tells his 510,000 subscribers that the headlines are not the whole story for Bitcoin's latest downturn. And here's a quote from him. What's dragging down Bitcoin's price here in regards to the market? Well, first off, let's just go ahead and accept that even though there are some headline reasons, it is a matter of people selling their Bitcoin on the market. It doesn't always have to do with the headlines, the news events. It can be people doing short-term trades or whales playing their games and driving price one way or the other, end quote. Folks, that's what I was basically in a nutshell just saying a moment ago, and I've been saying that for years and years and years, and he's right. And by the way, fun little fact, so I've been in crypto, as many of you know, since November of 2017, And Nicholas Merton here, referenced in this article, he's the only analyst that I still follow from my earliest days. I was following all sorts of people and trying to figure out who I thought made sense. Nicholas Merton, I came across him in probably November, maybe December 2017. And all the other analysts that I was just following to see if it made sense or if they had good analysis, all the other ones, nope. This guy, he does a good job. He's not a fan of Ripple, not a fan of XRP, but like I've said, you don't have to like the same cryptocurrencies as me for me to like and respect you. That's a childish approach to life. The Bitcoin maxis take that approach. But I think he does a good job on the whole. There's a reason he's got the following that he has. He didn't have nearly that many followers back then. Hell, back then, his channel was smaller than mine is now. And he was doing a killer job back then, but he deserves the following that he's got here. And so anyway, here's another quote from him. We've really got a chance here, and I'll say it more than I think most people will, that we might have gotten it wrong here, and prices might roll back down to this range around $30,000. I think that's the worst case scenario here for crypto, that we come back down to this consolidation range, kind of like we did back in June of 2021, even though we recently had a more heightened breakout in prices. And I don't want to read all the quotes from him. I just wanted to get the idea across. But he does think within the next 2 to 3 months, it's quite probable, in fact, that we could be seeing all-time highs for Bitcoin yet again. And so I'm super duper curious to see if that's going to happen. Or is the blockchain backer correct? And Bitcoin's actually in a bear market, in which case we may not see, who knows, when would we see Bitcoin all-time highs again? Would it be years from now? I don't know. But if not, then it seems reasonable to suspect that we might be seeing that sooner. But as I've said many times, either way, whoever's right, I'm just curious, but whoever's right, it doesn't matter that much to me, because the vast majority of my crypto holdings in terms of United States dollars, they're in altcoins, and I'm still waiting for them to pop. They haven't yet, and I don't think this is going to be the first time that doesn't happen. So I'm excited regardless. I think it's just a matter of time. As far as I'm concerned, that's the way that my simple little moon Lambo brain is looking at all of this. Now take a look at this. I just have a couple points of commentary on this, because there are some people and there are some entities out there that when it comes to crypto, they do not get it. And worse, for some of them think that it's actually legitimately harmful. Some actually believe that. There's also a lot of people that just say that because they don't like it. They don't actually think it's particularly harmful in terms of, nefarious use cases for crypto and this and that. But, in terms of it, crypto as an asset class threatening fiat currencies, I think that's where a lot of the fear comes from. And as far as the concern surrounding volatility, I think that problem fixes itself. And it's easy to understand why. Consider just a hypothetical universe where there's a cryptocurrency and it's just you and 4 of your friends trading it. So there's 5 people. You're one of them maybe, okay? Well, what happens if you decide that you're going to sell all of your holdings? And let's say that the holdings are equal, just for the sake of simplicity, getting this concept across. Let's say there's 5 of you, you all hold the same amount. So you hold 20% of the total quantity of whatever this cryptocurrency is, and you're like, yeah, I want to get the hell out. So you sell. Well, that's 20% of all holders on the planet dumping all at once. 20%. So you can see how a small number of people leads to more volatility, because what happens if there were 10 people? Well, then you're just 1 in 10. Now you're having less of an impact, and there won't be as much of an emotional response from other speculators in the market. Well, what if you're 1 out of 100? Well, then that's just 1% of all holders, and if you're all equally holding the same quantity of crypto, in terms of what that means in terms of volume, it's a pittance. It's not much. What if you're 1 out of 1,000 or 1 out of... So that you can see the more entities and the more individuals that get into crypto, it's going to smooth out the volatility over time. Not to say that there can't be big swings up and down. Like, that still happens even with the stock market, and the stock market's well, there's obviously a lot of trading in the stock market. It's been around over 100 years, but it's going to look more like that, more like precious metals as the asset class matures. There will be less volatility, less excitement, less price discovery. But that's why, given that there's only 2% of humans on the planet in crypto now, that's a huge part of why there's so much damn opportunity here right now. That's how you get the asymmetrical gains relative to any other asset class on the freaking planet. Some people, though, think it makes more sense to be fearful. So take a look at this article, again titled "Global Watchdog Group Issues Warning on Crypto Assets." says they pose risk to world financial stability. Well, that sounds scary. We shouldn't allow that. That sounds really risky. Oh my gosh. An international monetary watchdog group says that crypto markets could disrupt the world's economy if left unchecked. In a new report, the Financial Stability Board, or FSB for short, says that the staggering rate at which digital assets are being adopted by blue-chip investors could pose a risk for global financial stability. And here is a quote. Systemically important banks and other financial institutions are increasingly willing to undertake activities in and gain exposure to crypto assets. The prevalence of more complex investment strategies, including through derivatives and other leveraged products that reference crypto assets, also has increased. If the current trajectory of growth in scale and interconnectedness of crypto assets to these institutions were to continue, this could have implications for global financial stability. Oh my God. Someone's being a drama queen. Here's the rest of the quote. If financial institutions continue to become more involved in crypto asset markets, this could affect their balance sheets and liquidity in unexpected ways. Actually, let me read one more quote in this before I share my thoughts on this. The piece reads as follows. The FSB, which works in conjunction with authorities and other advisory agencies to develop effective market regulations, notes that institutional investors increasing their exposure to crypto assets using leverage could magnify the negative effects if they incur losses. And here's a quote. Risks could increase further if such exposures employ high levels of leverage, including through the use of derivatives reference crypto assets. Losses in crypto assets were accompanied by leverage, liquidity mismatch, and interconnections with the traditional finance system may amplify systemic risk arising from wealth effects. I just think this is a bunch of nonsense and hoo-ha. Look, financial institutions, pick your institution. I don't care. If you're just talking about institutional money in general, fine, that too. Like, these institutions will not engage in more risky behaviors than they can responsibly handle just because they now have exposure to the crypto asset class. So they have the ability to go leverage up 100, I don't care what it is, leverage up 100-fold. They're going to be idiots all of a sudden? It's like you think, so here's this, the fine, responsible, mature legacy financial system, and everything's going fine, and then they just go completely at S-word crazy because they dip their toe in the water of crypto. It's ridiculous. Like, the concept of that is completely absurd. And so it's just like watchdog groups, they say financial freedom. It's basically like poses a risk. That's the way that a lot of people look at this factor. It's like the financial freedom that crypto offers, it poses a risk to global financial stability. But think about it. Because look, I'm not saying that fiat currencies will cease to exist, but if they did, would that not be an indicator of just how terribly those currencies were managed? Or how much worse they were compared to cryptocurrencies if cryptos actually took over for the use case that fiat currencies currently enjoy? Should the people not be able, the people the world over, should the people the world over not be able to have what they want? What they want. If what they want is cryptocurrencies, they shouldn't be able to have that. God forbid nations be forced to embrace freedom of choice and financial responsibility, and maybe your fiat currency won't go to complete hell if you stop printing it into oblivion. That might be a good idea. United States now, over $30 trillion in debt. Are you freaking kidding me? You think this is going to go on without any sort of problem ever? Just perpetually? No, that's why just keep racking it up. Keep racking up the debt. There will be no negative ramifications. Fat chance of that. I'm not saying that it's a doomsday scenario necessarily, or that when the S word hits the fan, it's going to happen particularly soon. Maybe not even in my lifetime. And I'm 38 years old. Maybe it will. I'm not saying the dollar's going to completely collapse, but I'm just saying if it does, and it's certainly plausible, I don't know how long that's going to take, especially given that the United States dollar in particular is the world reserve currency. But we've seen this movie play out so many times. And so just to to point out these nonsensical things having to do with financial institutions, being over leveraged in crypto. It doesn't make logical sense to think that here's a perfectly responsible financial institution, very responsible, very mature, and then they're just going to act like amateur investors because they get just a little taste of crypto. Yes, they'll be exposed to a risky asset class, but what percentage of their assets under management would have exposure to that asset class even? For most institutions who are responsible, it's going to be a small percentage to start. And if somebody's going to take outsized risk and then they get wiped out, then good. Let the free market take them out. Freedom of choice, folks. Let people do what the hell they want. And if there are negative ramifications, so be it. It's called freedom. Freedom ain't free, though. Costs $1.05. I'm not a financial advisor. You should not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.